A new global conflict is unfolding, and the New York Fed president warns it could slam the brakes on economic growth while pushing inflation even higher. What does this mean for your money? John Williams, president of the New York Federal Reserve, recently expressed serious concerns about how the ongoing war will drag down the economy. He highlighted that conflicts disrupt supply chains and global trade flows, which are crucial for economic expansion. When key industries face shortages or delays, growth slows, meaning fewer jobs and less income growth for everyday people. This slowdown can ripple through multiple sectors, affecting everything from manufacturing to retail, making it harder for businesses to thrive and for workers to earn more. Inflation is already a major headache for the economy, with prices climbing for essentials like food and energy. Williams warns that war will only make inflation worse, as disruptions in commodities and energy markets push prices even higher. When production costs rise due to conflict-related shortages or higher transportation costs, companies often pass those costs on to consumers. That means your grocery bill and gas prices could spike again, squeezing household budgets tighter than before. The people hit hardest by the war's economic fallout will be consumers and small businesses. Families may struggle with rising costs of living as inflation eats into their paycheck. Small businesses, often operating on thin margins, could face supply shortages and higher expenses, forcing them to raise prices or reduce staff. This double hit of slower growth and higher prices makes everyday life tougher for millions, with less money to save or spend on essentials. The Federal Reserve, led by officials like Williams, has a difficult road ahead. They must decide how aggressively to raise interest rates to tame inflation without choking off the fragile economic recovery. War-induced shocks complicate this balancing act, as traditional policy tools may have limited impact in the face of global supply disruptions. The Fed's next moves will be critical in shaping how quickly the economy can stabilize and grow again. With inflation pressures set to rise and growth slowing, it's smart to review your personal finances. Tighten your budget, prioritize essential spending, and build an emergency fund if possible. Stay informed about price trends, especially in energy and food. For investors, diversification may help navigate uncertain markets. Understanding these risks now can help you protect your financial health as the economic impacts of war unfold. The war's impact on growth and inflation isn't just headlines. It affects your job, your bills, and your savings. Staying informed and prepared is key. Subscribe now to get daily updates on how global events shape your economy and your life.